Good morning and welcome back to the Good morning and welcome back to the Opportunistic Trader. It's October 26th, coming into month end. As I was saying to Vince, I was pissed yesterday. Was short the Nasdaq, got stopped out. It would be a $200 winner right now or more, but it's
Trader to
timing is
trader, we are considering
everything.
renaming. I'm sorry, again.
No, I was saying timing is everything. Had a couple of good Apple trades. Overall, the day was medium at best, but I knew this was coming. Last night we traded through the low of the other day. We're trading back at around the lows, a little bit higher than the low. So, there's going to be some really good action here. And overall, the mantra is very, very negative. Again, it's funny. Yesterday, the headline at a CNBC on their screen was, "This is the worst month in NASDAQ since 2008." And the funny thing about that is the market was up 4% intraday, and Mike and I were laughing because we're like, oh, they could turn it green. So the computer has literally lost its mind. It's running amok. Between the computer going wild, the market on close imbalance, fake market on close imbalances that shift after 345, both to the buy and sell side, which it shouldn't do. So at 345, if they're posting a sell imbalance, okay, you could pair that sell imbalance, but you can't go to a buy. And we're seeing that thing flip from sell to buy. We're seeing crazy stuff out there. So overall, markets down 30 in the S&P.
And hold on one second. Stay with us if you're worried about the A30 GDP number. We will be broadcasting that and broadcasting live through that.
Mike will give that to you live. He will give that to you live. So I don't know. I think it's probably more impactful for bonds potentially than anything else.
But you keep riffing on your hate of technology.
It's not a hate of technology. I just think it makes the market impure. S&P trading lower right into the number. But it's the first. I was saying to Mike, I've been trading a really, really long time, and I guess the number, I don't know if it came out.
Looks like it came out a little better than expected. Annualized at 3.5. They're expecting 3.3.
It's a Trump. It's a Trump fake.
The GDP price index is significantly lower at 1.7 versus
no inflation, Vince. You know that.
Core of 1.6 versus 1.8. So yes, not much.
It's funny. There hasn't been inflation since I've been in the business. I'm a little freaking worried about that.
No.
I started in '84 when there was inflation, and since then I've been hearing about this boogeyman, but he never comes out. No. Nasdaq caught a bid off this. Spoo, someone wants 700 E-minis. You know how real that is? That is fake, gone. It's not there. So, I guess market's ripping, actually.
Well, if the market's going to rally, this is not an excuse for it to rally. Higher GDP than expected allows Powell to remain independent, and not that he's doing it, but to say to Trump metaphorically, economy's doing just fine. But it doesn't mean
I gotta be honest with you. Just my thoughts. I really think I feel like it's like Armageddon out there. I mean, I'm in my little office here, so I'm happy. But outside in the real world, I mean, with these bombs and just this political infighting and the midterms, and I'm telling you, I'm calling it here first. I want everyone to know my call, okay? That Trump is going to get whitewashed, okay? Same way I said we were going to sell off. Trump is going to get smashed, okay? That's my call. I'm going with it, and that's going to be really creating a significant volatility in the market moving forward. But again, we'll keep. We're here to keep an eye on everything, be non-judgmental, and parse out the news and give it to you the way we think that it should be given. Yesterday's action was unbelievable. I mean, I was so taken back after having a move. Think about this. we had a move that took the S&P from up on the year to basically down on the year. The first time that's happened since February. Market comes out of the gate, okay? It literally comes out of the gate, rallies, sells off for like 30 seconds. Literally 30 seconds. I'm not even kidding.
Yep.
It was 30 seconds. And then explodes up, had a couple of jiggles during the day, but overall was bid to the moon. The market's just doesn't make sense. It just honestly does not make sense. So there's a lot of work to do in here. I think these computers are getting basted. We will see in here what actually happens to the market at these levels, because these levels are very interesting levels. It's the first time really in 8.5 years that we've been down coming into, or right now I think we're down slightly, flat coming into the end of October, November, December. So again, I was saying it yesterday and I'll say it again today. This will be a down year. I don't know if it's going to be down 2%, 10%, 20%. I'm not exactly sure. But overall, this will be a down year, and we're in the midst of a correction. And I want to talk on something, and I don't want to I'm going to say your horn because I don't like to do my own, but I mean, we've been all over this. I mean, we've been discussing these divergences in these markets for months, okay? And now, if you look at DAX is down 14 on the year. The Nikkei was up 5, is now down 8.5 or 8, okay?
Right.
China's down 23, and the Hang Seng, which always seems to hang in there, is freaking getting annihilated. It's down like 17% for the year. FTSE's down over 10, and we're basically green. And literally, it's an amazing thing. And listen, it looks like it's going to continue. I mean, I don't know how in tune you are with the dollar, but Mike has been discussing it with me. I mean, the dollar is making highs and making highs and making highs.
I know.
It's really strange. You don't think it's strange? I mean, it means people, to me, are like running into these things like there's no tomorrow.
If you're asking me, I mean, mechanically, I can tell you what I think is going on. I can tell you why I think it's going on, and it's tied to QT. It's if I had to boil it down to one thing, it's all tied to QT, and there are other things it's tied to. But if I had to say one thing, it's QT. But just to focus on the dollar versus stock market, at some point, the strong dollar is going to be acknowledged as a big reason for the lower stock market. All right. So that comes from this. QT is we're increasing our debt and at the same time decreasing the dollar float out there. And that destroys emerging markets because they need dollars for, we're not going to get into the whole macroeconomics of it, but it comes back to roost with us that we're going to have a weaker dollar policy if we're going to get out of this sell-off. And I don't think it's a coincidence that the dollar is stronger while the stock market is weaker. I mean, we have to unsanitize our QT, meaning we have to let the debt go out there and not restrict dollar flow. Basically, if there's only $1 left in the world, it'll be trading at infinity, and you won't be able to buy a share of stock if you're a foreign country. I think foreign countries not being able to buy stock as much as they used to, U.S. stock as much as they used to, is starting to weigh on us. We need a weaker dollar for this to stop. How's that?
I think it sounds good. I think you're probably right.
I mean, yeah.
But
I hate to boil it down to a soundbite, but that's I have to say that because we need to make time for what you're going to do to the other robots in your life that you are not happy with, like the Roombas, the vacuum cleaner robots, and they're probably on alert since you're so angry with the algorithms right now.
Well, I'm not. Listen, the algo can do. I thank God for the algo every day. I mean,
correct.
Correct. It's the greatest thing that's ever happened. But we were talking to someone that runs an algo, and I'm like, it's like machine learning. They don't care about anything. They don't care about data points. They don't care about earnings. They don't care about anything. They just care
Right.
about the price. If the
Right.
price is going up, they're buying. If the price is going down, they're selling. And,
Right.
I don't know yesterday, I mean, who is sitting in their office with the S&P trading at 27.25 up from 26.50? Really, on the year, the S&P is flat, and the market's just sitting here like like a bump on a log. I mean, it's just very, very interesting, to see what these computers, what they're doing,
Well,
But
it's not only that. It's not only, I think, algos. Uh, uh, there are time series algorithms that I think have been successful, and I think they're also getting chopped up now as well. And time series algos, for those out there who aren't incredibly familiar with them, basically they look at what happens every day at noon, and they go, what happens at noon every day for the last 5 years? Well, 90% of the time the market's up, and so they buy at noon. What happens at 1 o'clock every day for the last 5 years? The market goes down, so they sell at one, and that's how these guys chop themselves up. And the reason I bring that up, Larry, is I'm talking to you as an algo now. You have been spot on in the market calling it, and up until yesterday, the market has been, correct me if I'm wrong, opened, gone lower, and then rallied on the close, generally on the bigger moves. But yesterday was, I think, the first day that we really had a market that, if you want to ignore that 30-second dip, which was like a hole that someone sold it into, we're rallying on the open and we're selling off on the close. That's yesterday. I would like that to be a pattern as a time series type trader, to consider selling the afternoon, especially when earnings are coming out after the close on the tech side. I just want you to consider that. The market could be going lower, but not in the morning anymore, and maybe we want to collectively consider the overnight sell-off to happen, as opposed to the morning sell-off. You know what I mean?
Yeah, I mean, listen,
The
it's
timing
different.
might be
It's different
flipping
every
out.
day. I mean, the SPOO somehow rallied in here 10 points since the number,
Mhm.
and now it's only down 24, which is really 44. But before we had like a 50-point SPOO down opening. I mean, that's got stocks, crushed. I mean, what I'm wondering is when and how is the selling coming? Because it's coming. I mean, people are destroyed here. I mean, Facebook is, I don't know, it actually just bounced $1. It was trading at 145. I mean, off of bad earnings, this stock could go under 100 or 110. I mean, and I remember 3 or 4 summers ago, the first time it started ramping up above like 110, 120, you're giving back 3, 4 years in that stock, 3 or 4 years. And,
Yeah.
you know, Micron Technologies is trading at $35. Okay. NXPI, which was a takeover deal at $135. And, once this China spat happened, that deal sort of blew up. Qualcomm was going to buy them. That stock's $70. I mean, the deal price was $135. So that's in half. I mean, you got stocks. I mean, I could rattle off GE, Telephone, AT&T is trading under $30. I mean, it's crazy. It's yielding 8%. No one wants it. It's weird. They want Amazon. That's the only stocks they want, Amazon.
Right.
And it's $1 trillion market cap, and it makes a couple of $1 billion a year in gross. I mean, the market is in a really bad place. Again, we'll probably rally today because we rally every day. But
Well, as we know, the market and the economy are two different things. So,
I get it. But like Netflix is $300. Okay, Mike said offer earnings it was over $400. Okay, but forget that. Okay, that's like 25, 30%, but the stock's still up 60% on the year, or 55. Amazon getting smushed today, it's still up 50% on the year, 50.
yeah.
So you take those stocks out in a flat market, there were stocks down 20, 30. It's really bad out there. The environment is not good. Again, that's not going to determine whether the computer's going to switch, to buy side, which, it'll do all day for hours and hours and hours.
Right.
But overall, you have volatility up. Volatility just actually ticked down. It was trading above 27. Now it's almost under 26. It's very touchy. But again, I wanna discuss something that is sort of mystifying to me, and it's been really in the forefront. It was funny. They talked about it finally on CNBC yesterday or the day before. But it's this volatility. And this volatility, okay, doesn't make any sense to me. It makes no sense. The VIX is trading at 26. The front month VIX is at 23. And the December VIX is at 20. Okay?
Okay.
That's reverse fear. That's like, hey, we're buying this move. We don't care. We think the market's going to be higher at the end of the show, or at the end of the year, and it's kind of frustrating, to look at this. So, that's the one thing.
It's a term structure. It's a term structure play.
Yeah, but I don't understand it.
No,
Okay,
but
because
I'm
it's a
asking,
pure trade. No, but
it
it's a pure
sounds to me like
trade.
they're buying 5-minute options because they don't think it's going to last long. It's kind of like when people go and buy.
I think you're right, but I think it's even more than that. I think they think a rally is coming at some point before the end of the year. But my question is, if VIX is 27, and listen, the VIX is the most unrealistic thing that's out there as far as how they measure it and what goes into it. But overall, they're pricing down 30% in VIX, or 25% by the end of the year, and probably even go lower if we rally today. So, it's an interesting, I wouldn't call it dilemma, but it's interesting in general here. And, we got to keep an eye on it going forward. But that's been a really good cue for us in the marketplace. We've been utilizing that cue. It's really been working. But now it's leading me
if
to
you can clarify for people, you mean the VIX has been working as a cue, not the VIX versus the VIX futures backwardation.
right. And like, if you look at SPOOs right now, okay, the way the VIX is trading, it just keeps coming in and coming in and coming in. So it's interesting. The SPOO is just, since we've been on the air, just rallied $11, straight up. So that being said, we got to keep an eye on it, see what it does, and move from there. The market is, I think a little bit skittish, or a lot skittish. It's interesting that we broke the low level of the week. And since we broke the low level of the week, the markets have stabilized. The market is stable in here, I would say. Down a lot, but stable.
No, that's, if I may, that's exactly. I mean, let's assume for the moment that Powell knows what he's doing, and let's assume for the moment that Powell is not a day trader like us, or an active trader, I should say. And when you think about it, your statement makes perfect sense, because stable down 5-10%, I think, is what he wants. Volatile, how we got here, that's pretty choppy. But on a month-to-month basis, let's face it, they are increasing debt. They are pulling dollars off the market. A correction is appropriate at this point. This is the first. It's just the speed of it. They're scared about the speed of it.
Well, here's a good question. Okay. I think, and again, I'm not 100 on this, but I think the market was up like 18% last year. Maybe it was up more, but in that area. So let's say this year we end down 2, 3, 4, 5, or flat. Okay. You divide 18% by 2, or let's say we come in 5 and the 18% is now only 13%, and you divide that by 2. Not only is Trump not doing well, okay, he's made, the market's made money under him, but it's nothing like Obama. It's even nothing like Bush until the last year, of his presidency,
right.
When they smoked the market. But what's so great about Trump? Like, what's so great about him in the economy? The market, the market has a very good potential of not being up during his presidency, especially once he loses this thing. He's going to be like a total crybaby. He's going to be fighting everybody and everything, and it's going to get crazy. It's going to get crazy in the next 2 years, and the market doesn't really have a great return, and that's what people aren't looking at. Really. There's a lot more to come here. This is an interesting opening. They've been hitting volatility since I got in this morning. Volatility was trading at 27.30. It's now almost under 26. Surprising, but this premium discount in the S&P is big.
Yeah.
It's big. It's like $40. So, we're going to have a down 300 to 400 point opening, and then we'll see what the market does. But I'm surprised when we got down below the levels of the low 2 days ago that there were no stop orders. There's no selling at all, and then the market just firmed back up. But if they don't pull the rabbit out of the hat, which they seem to every time, but if they don't pull the rabbit out of the hat today, people are going to go home on a weekend, having to think, hey, this market is down on the year. We're not up money. What do we do? So I think it puts us in, an interesting spot. I want to go back a little bit to this volatility because I think, and we've been queuing on it, and, people have asked in the chat room, what we look at, for shorter term trading, that's the best indicator, the purest indicator. Like today, the bond market isn't really an indicator. If it was up or down today, I don't think it would have a market impact. I think, currency has been directional. The euro's at 113. Where the British pound is because we talk about it every day. I don't know how.
No,
I got to tell you what.
It's
honestly,
128, Larry. It's 128.
Is it?
Europe and Britain are sinking.
Oh, there it
into the ocean.
is. 128. It broke 128. Because
I'm not getting you off VIX.
132.
I don't want to get you off your VIX vamp, but as the euro has been sinking along with the British pound because of they have no plan for Brexit. We're not going to obsess about Brexit, but they have no agreed to deal. Number one. Number two, Italy is not resolved, and you are seeing that reflected in the euro and the British pound, among other things. And I personally think that there is an underlying sell of U.S. stocks coming out of Europe. I believe the Swiss are selling Apple. To simplify it,
really?
I just think that there's a I don't have information on the flow. Well, I mean, if you're having problems domestically and you start repatriating your currency, I don't know what the situation is, but I do know that they may be selling stocks to put it into something else, but to keep it in dollars. I'm just saying I don't see. Put it this way. There is no fresh buying of stock out of the European central banks as there had been for the last year. That's what I am seeing. Swiss bank, the Swiss National Bank being the main buyer. So back to the VIX, which is more on spot with people.
Okay. I'm happy to see that the British pound is at 127, 98. So it's still between 128 and 132, but I'm glad to see it's out of that range. I don't, it's funny. I remember
it is at the low end of a range. You're right.
I used to trade a lot of currencies a couple of years back, and these things would move 4 figures, 2 figures, 3 figures. Like this thing doesn't move. I mean, it just does not move. So I don't know how anybody that trades currency is really making money unless they go to, the Turkish lira or some South American currency. But other than that, I mean, the euro's been in a 3-figure range for so long that
I posted a chart in the chat, I think 3 days ago from Deutsche Bank that showed that G10 vol is at the lowest level in like 5 to 7 years right now, just the lower end of the range. And yeah, there's nothing going on. That said, dollar index is at the high of the year right now. And that's something that's a potential headwind as well, because a strong dollar is not great for really when it comes down to it. When you look at the numbers, people say that they want a strong local currency, but they really don't. And so it's not necessarily great for the U.S. economy, and that's what Trump has been kind of in between, because he likes saying, "Oh, we have a strong dollar, that's good," but at the same time, he knows, he's acknowledged, it's better to have a weaker dollar for trade, and he's a big guy on trade.
Yeah, somebody probably told him that in a meeting.
But yeah, but here we are at the low of the year. We're within striking distance here in euro itself, but dollar index is at the high, so we'll keep an eye on that. And dollar renminbi is at a new high right now, and Chinese authorities are talking about that. I posted something about Deutsche Bank in the chat on that as well. Gold, Vince, one thing I wanted to get to. Looks like the trade of the week has been in gold, basically buying in Asia, selling, peaking at some point in Europe, sometime between like 3 a.m. Eastern and 5 a.m. Eastern, and then selling off in US. Yesterday we traded up, I have the chart up here, we traded up to 42 yesterday, then settled back down at 32. Popped up overnight, high is 41.20. Here we are at 36, and the same thing happened on Tuesday, where we made a high of 43 and then traded back to the low 30s. Any thoughts on that sort of price action, buying in Asia, selling in the U.S. session?
Yeah, that's actually been one of the focuses of the AM Gold fix at 8 o'clock. There's been buying between 12 and 4 a.m. We wouldn't necessarily. We're not saying it's always buying, but it has mostly been buying. And by that I mean between 12 and 4 a.m., usually between 1 and 3, the gold market has been picking a direction, regardless of dollar action. The majority of the time, it's been bought. And I think yesterday's gold fix, or the day before, I put up a chart with ovals circling that hour frame going back a week, and there's a buy order. And to keep it simple, there is a buy order that comes between 1 and 3 a.m. and the market will rally, and then you would sell it in U.S. time to take your profit. And when that buy order doesn't show its hands at between 1 and 3, the market will go sideways and or lower, but it won't. It's not usually as steep. With bringing it back, that's why I was thinking about time series. That's actually been the subject that we've been talking about. Just bringing it back to gold is acting on its own now. That has been the 24-hour trade of the week, and actually why I focused on the S&P, because it had been selling off in the morning and rallying in the afternoon. And yesterday was the first day that I saw it rally in the morning and sell off in the afternoon definitively. And that's why I'm looking at that sort of thing in a time series. But basically, hope that sheds a little bit light on it. I think there's an order out there that buys at night during very liquid London hours. So that order might be coming out of China. That order flow might be coming out of London. But I will say this to your FX comments: it's irrelevant of what's going on. The dollar's stronger, the yuan keeps getting weaker, and it's just bad for everything. Domestically in the U.S. stock market, it's finally making its way to our market. But I think we all know that our economy is in the best position to take this hit right now, and that's why Trump is actually not incorrect to play the trade war game now. Not that I would play it at all. Strong dollar is the problem. I think we all know that.
Yeah, I think that is going to be something that we talk more about, especially if China continues and actually starts to pick up. We've had a stronger dollar, but there hasn't been much acceleration in the past few months with the low vol. But if we were to start, picking up a few big figures here, like, euro trades below 110, which it could easily do that in 3 days, or, it's the sort of thing that can happen quick, especially with this vol. That would be something that would be the headlines, and that would be something that would be the reason for the next leg lower. And, people always look for reasons for why things move. If the dollar were to strengthen a few percent, which is really nothing, that would start creating some problems. Because
which brings it back to stocks. It just seems that everything needs to move in an orderly fashion, and so like you said, it's low volatility on the FX side, translates to less volatility if you believe there's a correlation between dollar and stocks on the U.S. side. So while we're having great intraday ranges, Larry, on a month-to-month basis, I think volatility is probably pretty low considering how high we're coming off, the highs we're coming off of.
Also, to put everything in perspective here, right now, our drawdown, most presidents, looking at presidential drawdowns, things of that nature, most presidents seek at one point, or not seek, but see at one point about a 20% to 30%, drawdown in equities at some point. Right now, we're at about 11% in the past 2 years, so it's nothing. Clinton had a 20% peak to trough, Bush, Obama 22%, Nixon 34%, Reagan 33%. So, we've seen some volatility over the last week. We have VIX at 26, but this is still very, very, very tame. And we're talking right here, S&P's barely down on the year, Nasdaq's up on the year. So it's seems like it's been a large move, but we're still higher, flattish on the year.
Yeah, Larry was measuring the Trump versus Obama and other president measure. I think I saw somewhere recently, right before we started, just like that should have been the alarm bell to sell the S&P. But somebody said 705 days in, and the stock market has performed exactly under Trump as it has under Obama. And the guy's point was, it doesn't really matter who the president is, but you can't say that Trump hasn't affected some of this market behavior in the last 90 days between the Trump war, between the trade war, and the stronger dollar, and actually the better trading. Like, for example, the VIX as finally being, I think, better correlated with the S&P than it had been in the past.
Something also interesting, Larry, to kind of point over to you. Crude oil's come off. We traded up to 77. Trend followers specifically got heavily involved in that. Specs got heavily involved in that. And, the not performing well this year is the CTA index, which we had on CoQuest earlier this week, and they were talking about, they're heavily connected with the CTA world, and next week they're going to come on talking about these sort of topics, about who's performing well, who's not performing well. But the CTA index, like the New Edge CTA index, which is just a broad grasp of a lot of different CTAs, I have over 100 in there. Right now, year to date, they're down about 7%. The trend indicator is down about 15%. And, the sort of move that we've seen in crude oil is the worst possible sort of situation, where it gets up to 77, then now here we are back at 66. And same thing, equities, whether it be NASDAQ, S&P, they were heavily long that, and we've had a reversal there. So those sort of model trend guys are not performing well right now.
I don't, listen, I don't know how they're long S&P or how they were long. I mean, the market literally was, sort of made the high 3 months ago. I mean, it came back up to the high, but it hasn't really moved in 3 months to the long side. So I don't know. And then I guess they got, tapped out, and I'm sure they're going to look to short, on bounces now, potentially. I mean, what would be the next trade if you got stopped out of S&P? You were long and you got stopped out of S&P. What would you do next?
Well, most models do. Well, not most, but a lot of them typically always have a position. So yeah, they get stopped out in reverse.
Yeah. Yeah. So I mean, I don't. Those are just computers, and I guess it's funny when I think of CTAs. I think of large, one-off guys that traded, big positions, and now it's not like that. It's just a bunch of algorithms. Buying. I should have been a CTA. You're allowed to have like 30% drawdowns. If I lost like 2.5%, people were coming to my office to like try to kill me. And these people are losing 30%. They're like, "Oh, we'll shift the model around, and it should be okay." So, should have been a CTA. That was maybe I'll come back in my next life here as a CTA.
No, then CPOs will be all the rage.
Yeah, I mean, I don't know. I just know that when we had our fund for years, if we had a 2% drawdown in a month, we were freaking out. And these people are losing 20 and 30 and 40% on trades, and they buy oil and they watch it go from 68 to 74. They don't sell it, and they buy more, and then it goes to 65, and then they're selling it out. So I don't get the mantra. But anyway, looks like today will be really good trading. I have to say I'm surprised that the market is so stable and bid. The market is actually bid. It's been bid since I got in. Market is bid. Volatility is almost back into the 25 handle. Everything is safe, Vince, for now. I don't know if it'll be safe on the close, but it's safe for now. Computers.
You're the marathon man.
the computers have gone just off the chart crazy. NASDAQ is down 100. The NASDAQ is like 270 points from yesterday's high, maybe more. I mean, it's some crazy number. And if we fail off this opening, it's gonna get really crazy out there. Wow. Is that GE?
Well, what do you think the market reaction is? Because a lot of people only trade equities and haven't had a chance to, they went out and it was a great day yesterday, and then the markets got killed right after the close. So all of a sudden they're coming in. So what's the typical first hour like? Is it, is it margin calls? Is it based on the huge drop? And then what sort of reaction?
There's no margin calls. I've stated this before, and I truly believe this. Nobody is selling anything. When I say that, I mean any retail person, and I'll use my mother, even though, I don't want to do it, but my mother doesn't even know what she owns. She has no idea. She doesn't even know the stocks that are in her portfolio. So she's not selling, and there's probably 80,000 zillion people like that. They're not selling. The only people that are selling are a bunch of hedge funds or short-term traders, and literally the only people that were buying yesterday were computers running in front of buy orders because there were stops. I mean, I don't even mean stops. There were market people that had to cover. So these computers uncover those orders. They go, okay, there's 80 more buy orders and sell orders, so we'll buy it up. Let's make these guys pay. So yesterday they made everybody pay. And they brought the market to levels that no one thought we were going to those levels. Okay. And then when they're at that level, everybody's freaking out. Okay. They're panicking to cover the shorts. Then the earnings come out. They're bad. We trade. This is what makes no sense. Last night, we traded through the low of the entire move. Through the low. How we can't test that low today is beyond me. I don't know who wants to buy this market on the opening here, off the opening. Again, we are discount. And I said to Mike before we got on the air when we were on the lows, I said, I've been trading a long time, and I've rarely ever seen a $50 discount in S&P. That's a huge discount. So now we're like a $38 discount, which isn't that bad, but $50 discount's pretty good. But my thought today is you got to be a seller of rallies. They can't pull the same thing they pulled yesterday. If the market closes here, I think we're flatter down on the year. This is like the level. And then, we're coming in to a situation where there could be a lot more pain. But again, looking at the stocks, I'm taking a double take because I think GE, I wasn't focused on it yesterday. It must have come in $1. It must have come in 10% yesterday. It's back on the all-time lows.
If they had a new CEO again, maybe it would rally.
I mean, the thing's $11.
Right.
I mean, they're
right.
Thank you, Mike,
they need to announce a new CEO overnight.
No, I like this guy. I like this new guy. But I'm surprised.
Thank you for getting it, Mike.
I got it. Okay.
I like this guy. Well, he likes you too. He would like you to buy his stock. He wants you to buy his stock, Larry.
Full disclosure, I am long GE in my
then buy
PA.
more.
I am buying more this morning.
Dear Mom, you should buy more GE.
I'm going down with the GE ship.
but we're not sending a text on that one. That is not for the site.
No, that's PA.
Wait, what does Kramer owns it in his charitable fund?
Yeah, dude, Kramer is.
You should be buying stuff for your charitable fund.
Right, we have a Larry Benedict charitable fund.
Honestly, Kramer's the best. Okay?
Donating money to the shorts.
He's been a product of the bull market. Okay, he gets on no matter what, and he's like, "Don't sell, don't sell, don't sell." I know. When is he going to sell? Never. Don't.
You might be a guest someday.
Don't sell.
Well, he's been, just 4 or 5 or 6 days ago, he was on saying, "Oh, we need to buy," and the stocks have gotten crushed since then. And you're right. And he, serious on what he's been saying though. The past 10 years, the market has gone up. Anybody who said, "Hey, I like the market higher. I like this. I like that," the market has gone higher, and it's just been very few drawdowns. But
Vince, I want to just throw up like an analogy in a sense. So I remember trading in the pit, and I did it for a lot of years, okay? If the pit knew, and they knew, everybody was long, the market tanked. You know it.
Right.
They'd be like, how
Right.
do these guys know my position? The market tanked. If you were
Right.
short, the market exploded. Okay.
Yes. We had
Why
a
are we-
phrase for it in options too, but go ahead.
But my question is, everybody is long. I'm telling you, people are paying their country club dues. They're paying for their, Aston Martin car payment off the stock market, and they're not even in the business. It's like, it's crazy. And these are the same people in 2011 that were bankrupt. So, I mean,
Right.
and the thing is, I'm not saying I'm bullish or bearish. I'm negative on the market because of those
The world has
factors.
ADD.
But
Well,
no,
in terms of risk, the world has ADD. It forgets.
but I get that. But like, how do I'm using this word respectfully. How do the suckers win every time? Or are we the suckers? But
I know.
like, listen to me. I can't go to a doctor's office and pretend I'm a surgeon today. I'd probably kill
Right.
somebody.
Right.
These people are pretenders. They're pretend traders. Somebody is buying Amazon at $1,650. That's the most expensive stock that I have ever seen. Now, I'm not talking PE. I'm just talking the price of the stock. And the funny thing is, like Jeff Bezos, he doesn't want to split his stock. He doesn't want to split his stock. But the truth is, he made his stock non-investable, and he made his stock trade for a bunch of day traders, because the day traders need a stock that's going to move $30, $40, because when they buy 500 shares, they can make money. They're not going to trade GE. Nobody's trading GE today. What are you going to make in GE? A dime? So
Right.
and on a percentage basis, it's all the same, but you can't buy 100,000 GE and trade it for a dime. The commissions are too much and
Right.
whatnot. But overall, he's created uncertain volatility. But that being said, I mean, I'm looking at prices of stocks. I mean, AT&T is down like 30% on the year. GE is down over 30% on the year. These stocks are murdered. And if you take out Apple, Google, Facebook, actually Facebook's down. So they might actually, they might remove Facebook from FANG. I just don't know what the F is going to be. They got to come up with a new F. But it's like the Dow. When something doesn't perform, they just kick it out. So if
They'll change.
Facebook,
Exactly. The rumor is that the NASDAQ, the FANG stocks will be replaced with pot stocks today.
pot stocks aren't doing too well. Tillery is going to break 100
Well,
potentially today.
Inverted pot stock ETFs. Then I don't know what they'll replace it with something. But do you see any levels that you are looking at for this morning?
I see. Yes, I see 2 days ago's low in the middle 50s. We traded through that. I expect to get through that again today. I think it's an interesting day in trading, because if they hit them hard or they hit them, people are going to have to go home this weekend thinking about it. And
Yeah.
actually, no matter where you bought, you're down money pretty much, unless you bought the dead low in February, because we really haven't been at this level. I think there's much more downside to come. I think we probably, right into or right after the election, take out the February lows. I know that's a bold statement, and I think it's about 8% from here. But I think it's very, very possible. I have a negative bias in the tape as far as what I'm seeing. I don't like the fact that we're so discounted, in the market. I mean, they brought it back a little bit, but
But that's what's sticking out with you today. It's such a huge discount, more than usual.
No. The earnings made the discount. I mean, listen, stocks are where they are. This is priced
No,
right. But
I'm not disagreeing. I'm just saying you said that 3 times, and I'm
look.
noting it. No, I'm noting it as a student.
1,800 e-mini. Okay.
Right. There's a huge spread.
Wait till this trades out. I'm sorry. There's a bid in S&P futures that's like going up on the market. It just keeps coming in for 2,000 minis, and they canceled.
It canceled.
It canceled. Blam blam. The exchange shouldn't look into that though. That's legit. They blow up the market to basically. That is actually amazing. We just watched it live. It was
that's
like
legal.
a total fake. That's totally legal. I mean,
No,
it's
that's
so
legal.
fake.
But putting in a bid on one side of the ring,
Right,
putting
now
on a
there's
bid on
now
one
there's
side
a
of the
fi-
ring
wait,
while
now
you're
there's a
selling on the
five-
other.
Right, but now there's a
Anybody listen to
500.
the screen right now, 3 boxes below.
It traded out. It disappeared.
It
disappeared.
out. It pulled it.
Pulled it. I mean, it's ridiculous. Before it was 1800. I mean, it's like they're 50 up market, and the guy's coming in with
Volatility, we're
1800.
50 up before the market opens. And
It's a scammo. Now there's another fake 500. Look.
Yep.
Didn't even trade out.
Exactly.
Didn't even trade out. So anyway, back to the market. But if you have S&Ps and a wheel on your screen, you can see this fake buyer coming in. It's trading, but the guy keeps coming in for 500 and 1800 and 300, and the market's 40 up. So
if I could just say something, I think for the audience,
back again with the
when
fake 500.
when professional traders say it's a fake buyer or a fake bid, that's because what we're seeing is something that we've not only seen on the floor, but you look electronically and you see a market that's, say, 50 up, right? 50 on the bid, 50 on the ask. If you're a buyer of size and you really have to buy 500 to 1,000 lots, it is not very good execution to show your hand in a market that runs away from volume, as this market is right now. So if I have to buy 500, I'm going to buy 50 at a time so I don't outsize the market.
Right.
But if I want the market to rally, we would consider it a fake bid, or the word is spoof, that you would be suspicious of a bid that comes in and shows 500 lots, does not trade, gets canceled, and then the market drops a little bit. That is what we would call coming in backwards, or a spoof, or just basically poor execution. So when you hear Larry say that, and Michael echo that, if you come in and you say, I'm bid for 500, and whoever's short gets scared and covers, then you could pull your bid and you could sell into that rally. So it's poor execution at best, and it's spoofing at worst when you see that sort of thing. And from your floor experience and from your studying tapes experience, that to show an outsized volume that the market can absorb, kind of like in trading places, the market doesn't trade to size anymore. It runs away from size, and that's how these people are getting out of positions, by bidding when they want to sell.
Well, 2 things on that. The market absolutely, like the last thing you said, runs away from size without a doubt. So if somebody puts in 1,000 lot bid right now, algos will automatically bid it up 4 boxes right away because they're like, oh, a buyer in there. And then as it cancels, back down. And then the other thing, and it's a completely different conversation we can get into another time, is, because you were just getting into order execution, if you did have 1,000 lot to buy, you could do something called iceberg, which hides the order, but that's also another thing that's misleading, because the algos actually do see those icebergs, but the human eye does not, which is also unfair, because the algos have a way of seeing the order, I guess.
Right.
Order
if you put in 300,
they see the true depth. So if I have 1,000 lot order to be filled 50 at a time,
which is totally illegal. They shouldn't see it if the public can't see it.
The public can't see it. They shouldn't be able to see it, but they can.
That's a whole nother
ball
game.
The reality is, the thing that I think is important when you're talking about markets that are valid versus markets that are broken, doesn't mean you can't trade a broken market, but I was taught that markets trade to size. Broken markets trade away from size. So in a deep market, that's truly a market, quote, if I bid for 1,000, someone's going to find a seller to sell me 1,000 because someone has sell side liquidity. But in a market that is broken, whether it be by algorithms or by manipulation or by people that are front running each other manually, the market runs away from size. Examples of that would be thinly traded markets and energy markets that are dominated by small groups of people. The point is, there's a lot of money to be made in broken markets. Just recognize that if you have 1,000 to buy, even if you're iceberging it, you think no one is seeing that. There are people that are seeing that, and they're called computers.
Yeah, which is surprising that that's the case, but it just so happens it is.
Let me take a look at the schedule today. We've got Tracy Shukart talking to us about technical analysis, coming on talking about trading. She's traded well this week in this volatility, so it'll be interesting to hear from her. Then at 11 o'clock, we have Ben from Commodity Research Group. He joined us a few weeks ago talking about gold options and different option strategies. Today, he's really going to talk more about option strategies and just in general with all this volatility, going over different option strategies to help navigate the markets. 12 o'clock, Mark Fisher, who's just going to talk about the markets. A lot of interesting observations. He's kind of had bunch of different trade ideas over the last few weeks, many of which have been pretty good. His last one was talking about oil. When we were trading like 73, he was looking for lower. When nat gas was around $3, he was looking for to trade higher. So we'll talk to him about that. And then throughout this volatile times, Larry will be on often. And so if you guys have questions, put them in the chat room. And if we don't get back to him right away, we'll definitely get back to him at some point, whether on audio or typing back. But that's the schedule for today for right now. We've actually had a really good week with different presenters. On Tuesday we had Top Step Trader come on. Wednesday we had CoQuest come on talking about CTAs and what it takes to raise capital and become a business. Yesterday we had Henry Schwartz from Trade Alerts. He's got an interesting product, and we'll actually once the market opens, we'll show you what his product is showing in terms of unusual activity to help navigate the markets. So a lot of good presenters this week.
I just want to, and it's interesting because we actually saw some live trading there, and if people were watching, you could see like the buyer come in that wasn't real, push the market up to 67, probably sold what he needed to sell, and now we're trading 61. Looks more in line for the opening. You got to keep an eye today. It's very, very important. The 50 area, the 2650 area on the E-mini, which is 11 handles from here, is a key area. That will be the weekly low. I do expect it to take that out. We'll see if there are stops. There's got to be some real inherent pain going on. I think the NASDAQ could be down about 8% for the month. What?
It's more than 8.
It's more than 8 now?
Yeah.
So it's more than 8 right now. The S&P is down probably 7 or 8. And the thing is, we're running out of time for returns. So the people have to put out their returns. S&P is down 9.5 for the month, or 9. We could have a down 10 to 12 month, and I got to tell you,
right now NASDAQ this second the futures are down 11.25.
Where they're trading right now.
The date futures, 11.
Yeah, so 11.25, and the S&P's down 9.
875.
Yeah.
Nikkei down 12.5 month to date. Russell down 12.5.
Yeah, so there's nowhere to hide. What do we have? When's month end? Wednesday? I think we
Wednesday,
have
Halloween Wednesday.
3. Oh, hairy Halloween. I like Halloween in trading. It's exciting. But there's basically a couple of days left, 3 days. They can't bail them out. I do expect some selling in here on the opening. We'll wait and we'll see. We'll see what happens. S&P's trading 60. I'm gonna get to trading, and that's it really. Good luck to everybody. Our bias is negative, as it's been for the last 3 weeks. Wow, the NASDAQ took a leg lower. The NASDAQ just dropped like 40
Got 10 minutes to the open. It's going to be a volatile day.
All right, good luck, everyone. I'm